So, Ritesh, what is this brave new world?
So the world has changed after 2020, where governments have become more powerful, private sector has become smaller. Governments are deciding winners and losers. So that is why I call it a brave new world.
Okay,
So this is a great chart from Ray Dalio. Just look
okay,
at the chart. We are facing the 1940s playbook that it has happened only once before. I'm talking from US perspective. Why? Because US is a reserve currency of the world. What happens in US affects every other country, every asset in the world. So we are facing the 1940s playbook in which debt to GDP peaked at 119 before being inflated all the way down to 30% over 30 years. So if you see what happened in 1930s to 1940s, see the chart over there that the money
yeah,
supply surged, the interest rates were kept lower. So after 10, 15 years, because of money supply, inflation started rising and interest rates started rising. In 2010, we were exactly at the same point of time where we were in 1930s, where money supply started surging, interest rates are lower. Between 19th, then you look at the top part of that. In the top
okay,
part, you will find that US debt to GDP was 120%. It went down
okay,
to 30% over the next few years as GDP, as nominal GDP started doing very well. Interest rates were kept lower and US debt to GDP came down. I will show it in the next chart very clearly how it happened.
let me move to the next chart then.
Yes. See 1940s. During this point of time, can you see the interest rates? Can you see the inflation?
So, it
So the
peaked
interest
in,
rates
in
is the red
1940.
line
Yeah,
and inflation is the blue line.
yeah, okay,
During this time, fixed income was like a certificate of confiscation. Bonds were certificate of confiscation. There were three times when the inflation went above 10% and then came down to zero or
okay,
minus. I think we've seen the first one of that in the US, where the inflation touched a high of 6 7%. We are down to 2%. Possibly, maybe, who knows, we can come down to zero.
okay,
But if you're following the same playbook, which in my view it is, that over the next few years, you will see these waves of inflation. But interest rates will be kept lower. So
okay.
this
And
in this
when you say
kind of scenario,
certificate of confiscation, what does that mean? That fixed
means
income is
the
a.
value of money was falling faster than the interest rates you were getting on your deposits.
Okay, yeah. So, because your interest rates are like almost, if you look at the red line, it is almost between 0
Yes,
to 2%,
0 to
and
4 5
inflation was
percent
15%.
exactly. Whereas if you see the inflation 10%, 15%, three times it happened.
Yeah.
We are in this. I think Fed is playing the same playbook now, and those shaded portion are the ones where those were the period of inflation, were the period of recession. So we had short
Okay.
period of recession. Can you see very short period of recessions we have?
It's a 1 year long recession here, I
Yes.
think in 1945. Yeah.
Yeah. Whenever the recession has happened, they increase the money supply, inflation went up. Whenever
Yeah.
the recession happened, they increase the money supply and the inflation went up. During this period of time, real assets, did very well.
When you say real
These are
assets,
real assets
what
whose
do you
supply
call
cannot
them?
go up.
Yeah. So what are the real assets when you are classifying them here?
Okay. Real assets, I would say even gold, silver, I
Yeah.
would say real estate, I would say industrials,
Okay.
blue chips.
Blue chips means equities.
Yes.
Yeah.
So I think we are in the same period. Can you see that around you? When you sort of look at the asset market, you can also
Yeah.
see the same things happening around you. Okay.
I think you just posted on your WhatsApp channel today that gold touched all time high.
Yes, exactly. For the simple reason that value of money is falling dramatically. This inflation is going to go back again. Without inflation, US will get into a debt trap, which I will talk about in the subsequent slides.
Yeah. Yeah, let's go to the next one then.
So can you see they are borrowing? So this $7 trillion is the gross issuance of US Treasury. not on yearly basis. This is on quarterly basis. So in
Okay.
2020, we understand why they borrowed, right? Economy was
Yeah.
in downs, COVID, serious problems, private sector not spending money. So we understand government takes on, the ownership of bringing the economy out of recession, right? They had to borrow that kind of money. Everybody borrowed. Why did they have to borrow the same kind of money in 2023, 2024? Why are they going to borrow the same kind of money in 2024? Isn't the US economy growing at 3-4%? Isn't
Yep,
the
they are.
unemployment low? They're still
So
borrowing the
why are
same
they
money.
doing it then?
Exactly. That is the whole point. That if tomorrow even if recession comes a little bit, unemployment starts rising, that means they will borrow more than what they had borrowed in 2020.
Yeah.
Would you lend money to this country? If it was not a country, would you lend money to this country at the same at the prices which at the interest rate which you are giving now? So everybody is asking the same question now. Why did you have to borrow? It's simply because US is in fiscal dominance. US is having to spend huge amount of money. They are reindustrializing on one side. They have liabilities which needs to be taken care of. Medicare they needs to take care of. They need to industrialize its own defense, other things on defense. So US is becoming, this demand for money from US is actually going up. From US government is actually going up.
Okay. Yeah. So with this now, I think it makes total context of this slide.
And this is hyperinflation. If I would not show over here, what the slide is all about, wouldn't you say this is hyperinflation? If I would
Yep.
not show the context, I would just show the chart without any annotations, without anything.
Yeah.
Wouldn't you say that, this is hyperinflation?
Yeah. Something is growing really fast.
This is interest rates on US debt. And this is
Okay.
not my data. This is US government's own data.
Okay.
They will be spending $1 trillion this year. Last year they spent $1 trillion only on interest payment on their debt. And by 2032, they'll be spending $3 trillion of interest
Wow, that's
on their debt.
huge.
If your income was not rising, Sachin, but your interest cost is rising so dramatically, wouldn't you default?
Yeah. Absolutely. Any normal human will do.
Right? But there is a technology known as printing press, which only governments have.
Oh,
Right? So they
yeah.
can print their way out.
They can.
That means the supply of US dollar is going to go through the roof.
Yep.
But is the supply of gold, silver, blue chips, real estate going in the same way as the
Assets are
supply?
going to be limited, right? They will be limited. Yep.
So the value of assets is not going up. The value of money is going to come down.
Okay. Same thing
And
that happened post 2020, that the years that followed, we saw
yeah,
huge.
1940s, exactly
Yeah.
1940s playbook they are playing now. They have to inflate away the debt. Thanks.
I think you also say one thing that income earners are being left behind
Yes,
in this
only
world.
wealth. You need to be a wealth owner.
Yeah.
Incomes are not going to rise. You need to be wealthy to participate in this thing. Or
Yeah.
even your income, you need to convert it into assets.
Assets.
You cannot be a saver, which most people don't understand. In this environment, you cannot be a saver. You have to be an investor. So this is what I want everybody to read it. It will just take a couple of minutes.
Okay.
This
So maybe
very
I'll
good
read
book.
it out.
Yeah.
So, the ban on TikTok could do very well end up being a Pyrrhic victory for the likes of Facebook. So, I'll highlight this. Just basically, my first take, this is more intervention in the big tech space, which usually more government intervention in any space isn't really what you welcome. Secondly, and frankly, much more importantly for me, is that the second time in 2 years, where foreign investors are basically being told they'll be judged on a different set of rules than the domestic investors in the US. You'll know that I think a couple of years ago you had the seizure of Russian assets, and today you have this. So I basically think the message is that US Congress is essentially sending to the rest of the world. They're basically saying, look, a foreign dollar invested in the US is not equal to the domestic dollar invested in the US. And they're saying this at a time when the US is running record high twin deficits.
Deficits.
Yeah, and so at a time when the US needs to attract those foreign dollars to keep the show on the road, and essentially the US Congress is saying, keep sending us your money, and we'll tell you later what we think of the money should be worth.
Exactly.
Yeah,
So we are owning your dollar, but first you sanction the Russian FX reserves.
yeah,
You don't allow US steel to be bought by Nippon Steel, which they have blocked.
okay,
You're cutting out TikTok. I have no views on TikTok. I'm just saying,
okay.
just cutting out
Yeah,
TikTok.
this is a macro view. This is a very neutral view that
Yes,
you're
just a
putting in.
macro view. What good is US dollar? What good is US dollar? That's the whole point Louis gave is asking in this interview.
Okay.
Exactly at the time when they require foreigners to buy their debt because they are running huge amount of deficits. But the rest of
Uh,
the world understand this thing. And that's what I have explained in the next slide.
Okay.
Okay. So the red one is the red is actually the US treasuries, central bank purchase of US treasuries and central bank purchase of gold. In 2013-14, China was the first one to understand that thing. It is
Okay.
possible that their dollar invested in US might be confiscated. In
Okay.
2013-14 itself, China stopped buying US treasuries. And in 2022, the day Russian FX reserves were sanctioned, you see that red line. More and more
Okay.
central banks stopped buying US treasuries.
Okay.
And what did they buy? Gold.
Gold.
Gold is the blue line.
Yeah. So the gold standard, so to say, I think you also
Let me
written it
say,
somewhere in.
yes, as Luke Groman says, gold is coming back as a neutral reserve assets. Those who has gold, those who will have gold will make the rules. Indian households are sitting on 22,000 tons of gold. It is not Indian government, Indian households.
Indian
Thanks to the whole
households.
world. Chinese households, Chinese young people are buying gold left, right, and center.
Yeah. In fact, I've seen videos, there are videos where there's almost a rush for gold onto these places.
And who's selling all this gold? Western world.
Okay.
Exactly.
That's
Yes.
interesting.
Yes. Next. So this is the reason US is afraid of China. It's not about power competition. In 1960s, which is on the left side,
Yeah.
US countries connected to the primary trading partner in 1960. Look at US, look at UK, look at Germany, right? On the left side, France, right?
Yeah.
On the right.
They were hub
And
and spoke. Basically, they were the hubs and others were the spokes.
exactly. Look at in the 2020. Look at
Yeah.
influence of China, influence of US, on the other side, a little bit of Germany. This is what US is afraid of. That our biggest export now is US dollar. The biggest export of China is goods and services. And now our supply of US dollar is going to go up tremendously because we need more money. It's a matter of time. Global investors will not buy our dollar unless it is backed by something. We need to reindustrialize our country before we run out of charity of foreigners. And
Okay.
US wants to reindustrialize back. And that is what we are seeing these days. Everybody looks at Nvidia or tech stocks in US, right?
Yeah.
But people don't look at the industrials in US. Every industrial ETF in US is at an all-time high.
Yeah,
Small
that's
cap,
something
large
that
cap,
looked
mid cap,
upon.
everything.
So people only talk about Fang Mang,
Yes.
or
Whereas
all of these
bull
on the
market,
podcast.
silent bull
Yeah,
market is continuing somewhere else because huge amount of US IRA money, Inflation Reduction Act, and CHIPS Act money is going into industrializing
industrial
US
sector.
for energy transition because US understands this thing that foreigners are no more going to give it to us. Going to buy that paper dollar unless it is backed by something. And the
This is
next
such
chart
a
is
shift.
swing it. And
Yeah,
the
this is
next
such a
one,
shift.
exactly. You know what happened in Baltimore, right? Right, the next one.
Yeah.
You know what happened in Baltimore, right?
Yep.
Just
The bridge collapsed by a
yeah,
ship
the bridge
that hit
collapse, right?
them.
Now read the statement on the right side from Geiger Capital. 8 years ago, the US Navy cleared 10 damaged ships from Pearl Harbor in 3 months and had most of them repaired in 8 months. Now the Navy outsources its salvage operations to a European company. It will take months to clear the Francis Scott Key Bridge and years to build it, rebuild it. Can you see the difference?
Yep.
Think about the previous slide of 1960 and 2020. Now look at this thing, where they have outsourced everything to rest of the world, and they are worried about that thing. So next few years are going to be massively rebuilding their industrial base. They don't have a choice. They just don't have a choice. They know about it.
Yep.
And again,
And
going back to our macro theme of the decade, because in US and India, it's exactly the same: electrification. There's so much written over there. On top, I'll let me just read it to you. A growing number of US electric companies have committed to the carbon emissions, reducing the carbon emissions by 80%. Electrification
okay.
is a key priority for European Commission. Okay, on the right side, we need to spend $4.5 trillion between now and 2030 alone, as per World Economic Forum. On what? Electric grid, electricity, electrified heating, electrified transport, energy storage, everything. And at the bottom, which I had not taken into account, I thought it was only about industrialization or data centers. Here come Elon Musk and says AI will run out of electricity and transformers in 2025.
Okay.
The massive advancement in AI itself will take care of the current, supply of electricity and transformers alone.
So you'll need much more in the future.
Yes, only for AI. So we have reindustrialization of US and other countries. Europe is doing in a different way. US is doing a different way. India is doing in a different way. Industrialization. Then we have energy transition, whether it is EV charging or whether it
Okay.
is solar or wind, converting into from intermittent to stable energy. The third one is the AI, and the fourth one is the data centers. And that is why I'm getting more and more confident about this theme. So same companies in this ecosystem in US also are doing very well.
The electrification companies or on
Yes,
those themes.
yes, on the industrial side.
Yeah, and I think you'd also put in an article that a transformer company is sitting on backlog of years of orders.
Yes, on years of order.
Yeah,
Electric cable company. That was an electric
electric
cable
cable
company.
cable company. Yeah.
Yeah. This is just on nuclear energy. I've updated the chart. Last week something important happened. Biden
What?
administration announced a 1.5 billion loan for first reopening of a shuttered nuclear plant. On the right side, you must have read India is now seeking 26 billions of private nuclear power investment. In
Okay.
2008, before Fukushima, U308, raw uranium, touched $140.
Okay.
Just few weeks back, it touched $100. It is back to 85. I strongly believe that over the coming years, you know, uranium price will be far, far, far higher than what it is currently.
So the
All
winds
simply
are
because
changing on nuclear, especially after
yes,
the Japan incidents. A lot of companies were
absolutely.
decommissioning their plants.
And now they are recommissioning it back. Simply because we understand now that there are better technologies available, and nuclear is the best clean and green energy out of there.
And with so much
Everybody
focus
knows
on
it.
net zero in different countries, I think nuclear will become the key.
Absolutely.
And the
Absolutely.
important
Only
part is,
Germany is not understanding it. US understands it. India understands it. China obviously understood this thing far earlier than France. It is already there. Okay. Other parts of Europe is understanding that thing. So this
I
is
think the
going to
word
be
is the only clean, and I will emphasis on the
exactly,
word only that you put in.
exactly
Because,
only clean and green energy.
and cheap.
Cheap. Yes.
Because that's what you need to go to net zero. You cannot have very high electricity prices if you want to go to net zero.
Absolutely. That is why cheap. And do you know that China makes nuclear reactor, the entire nuclear reactor, they make it at one fifth the cost of what US makes.
Okay. That's
So it's a
impressive.
very interesting thing that China is now having a nuclear diplomacy across the world, where they will make for in small countries. They've told them that we will make nuclear reactors for you, we will run it for you, but then they will have that those countries, they
So
will
the
be
same that
owning those
happened with the
countries.
road initiative, yeah. I
Yeah,
mean,
they will be
it's
owning
their way
those
of
countries.
diplomacy.
Yes. So you will be having the nuclear power plant diplomacy now. Something on gold. This is a
Okay.
great chart. Last hike is the best time to buy gold. If you believe that you've seen the last rate hike, so you've seen those circles over there.
Yeah.
Those circles is when the Fed fund peaked out,
Okay.
and then you see what happened to the gold prices after that.
Yeah,
This was
they've
during the
grown.
recession.
Yeah.
So I think we are starting on a good bull market in US, in gold.
In gold. I think even in Indian rupees, it has touched 67,000
Yeah, yeah.
Indian rupees right now, which is at all-time high.
Yeah, global gold prices are going up. So if Indian rupee is going to be stable against US dollar, then it has to be a high price for gold in Indian rupees. And I think best is yet to come.
Okay. So that's a big statement, you know.
Best is yet to
The
come in
best
the
is yet to
country.
come, yeah.
Yeah, yeah. Next one. So this is about Argentina, where something different is happening than the Western world. Earlier, we used to look at Western world and say, they used to be fiscally tight. Public sector employment as a percentage of total employment used to be low. Okay,
Yeah.
now we cannot say the same thing about the Western world, but Argentina is taking a mantle over there, where the new president is cutting down ministries after ministries, reducing the public sector workers, and people are
Yeah.
very gung-ho about Argentina. But I think when the government spending comes down, you need to own bonds and you need to own the currency. You cannot own the equities.
Yeah.
In a country like US or Canada, where the government spending is very high, public sector employment is very high, the debasing of currency happen. When debasing of currency happens, you need to own assets. In
When you say
Argentina, you
debasing of
need the
currency,
assets.
what happens? When you say debasing of currency, what does
Debasing
that
of
mean?
currency means more fiscal spending means higher supply of currency.
And your money goes down. Debasing is
Value
basically
of money goes
the
down.
value of money going down.
Yes, when the fiscal spending is high. When fiscal spending is low and you are cutting down bureaucracy from the system to bring up the productivity and efficiency, then the value of currency goes up, the value of bond goes up. So can you see over there that Argentina CPI is coming down, and on the right side their US dollar bond value is going up?
Yeah.
So what used to happen in Western world is now happening in Latin America. What used to happen in Latin America used to happen in Western world. In Latin America, you needed to be an asset owner
Yeah.
because the value of money used to go down.
Yeah.
In Western world, you could own bonds because the value of money used to be stable, interest rates used to be low, inflation used to be low, so you could hold bonds. Over the last, let's say, starting from 2020, the tables have turned. Where Brazil, Mexico have interest rates higher than the inflation. Argentina is on the same side going. On the other hand, you have Western world, which is so much indebted that the value of money has to go down over the next few years. So, what was your playbook of Latin America needs to be your playbook now for developed world. What used to be your playbook for developed world used to be, should be your playbook for Latin America.
The market has shifted. I think after 1990s in the US or the Western world, there hasn't been a very big uh, recession or that sort of event. You know, there have been events, but there have been very small or recoveries happened fast
Yes,
in those times. I think this is a totally different world
this is a
that you are
completely different
envisioning.
playbook, and people need to take. Brazilian bonds have done very well in US dollar, so you need to
Okay.
take this thing into account. So GEFCA make comes out every year with the cyclical changes. So I will talk
Okay.
about three countries. So one is inflationary bust. What is inflation? In inflationary bust, what does well? Buy anti-fragile in cash. You should be in
Okay.
cash. So you have Canada on inflationary bust. India is an inflationary boom according to them for 2024, which means
Okay.
buy price sensitive growth, contrarian and cash.
Okay.
Okay, where economic growth and prices both goes up in inflationary boom.
Okay.
In disinflationary boom where US is there, economic growth rate is high, but for the time being inflation is low.
Okay.
What does well in that? By volume sensitive growth and income. So there's a very good snapshot of which countries, which they make it for 40 countries, which countries are in which quadrant, and they come out every year, at the start of the year. How should you be positioned in these countries?
Okay. So when you say buy anti-fragile and cash for the first countries, cash also means the bonds or the fixed income, or cash is
You just need to
uh,
own cash. They are saying because it's not a good environment to invest in anything.
okay.
So economic growth is coming down, but the inflation is there. That you can see it in Canada, right? Economic growth is coming down and inflation is there. And by anti-fragile, I would even go to gold.
Okay. Sure. So moving on to the next.
So how to invest in this brave new world? Follow the liquidity in this brave new world. Mexico is the beneficiary of US CHIPS IRA liquidity. So this CHIPS and IRA Act is applicable to US, Canada, and Mexico because of USMCA treaty.
NAFTA.
Mexico, yeah. So more and more companies are putting factories in Mexico to take advantage of cheap labor, plus also the market which is growing. Japan is the beneficiary of inflating away the debt liquidity. Africa is the next frontier where liquidity battles will be fought. Africa is
Okay.
resource rich. China had put a lot of money, and America is now coming from behind and saying, "I want my influence back over Africa." Africa will see huge amount of liquidity infusion in the coming years. So
Okay.
Africa will be a great place to invest. Precious metals are the beneficiary of diversifying away from reserve currency. Reshoring, friendshoring, energy transition will require investment in electrification ecosystem and nuclear energy. Finally, in this brave new world, listen to the government and regulators. If they don't like anything, don't touch. If they are focusing on developing some parts of economy, then it is a no-brainer.
Okay. Thanks, Ritesh, for this.
I think the just next couple of slides we have to show for
Oh, okay. There
yeah.
are,
So we have to have a disclaimer
okay.
and the next one. Yeah, great.
Thanks,
Thank you.
Ritesh.
Yeah, thanks.